The Treasury has just released its National Payments Vision. Now, this policy paper builds upon the work of Joe Gardner and the Future of Payments Review, and the Treasury would like to set an ambitious, future-looking payment strategy to really drive economic growth. In this video, I'll look at the nature of UK payments today, what the key policy areas are in the payments vision, and the key question on everyone's lips, whether or not this is really setting the stage for achieving this ambitious target, or if it's not quite lived up to its expectation. So where does the UK stand today with payments? Well, generally it works relatively well. Faster payments allows consumers and businesses to send instant payments to each other. And the card market, whilst expensive, generally delivers retail payments very well. But there are some key challenges underlying this. First off, the faster payment system was implemented in 2008, and it needs some updating to keep up with where the rest of the economy and market's going. If we look at cards, there is the cost issue. And on top of cost, what we've seen is that innovation in a lot of retail payments has actually been driven by Google and Apple Pay and big tech, and it's been quite narrow. If people don't have an iPhone or Android, they can't access a lot of the new innovations. Let's then look at open banking. Open banking has delivered some significant value for merchants and some great use cases, but it needs a bit of help to get into a broader range of use cases and really cement itself in the economy. And then finally, we have fraud. Fraud is an £8 billion problem. And there's been some really important initiatives to try and solve fraud, but in many ways they've caused the payment system to clog up and actually make it harder to make payments without necessarily solving the root causes and the root entry points for fraudsters. So the UK from a payment system is definitely not the worst, but there's some opportunities, and I think what's really important from the national payments vision is that we want to be an innovative leader, so we definitely need to do some work to get to that place. So let's get into the detail of the national payments vision. To begin with, the Treasury would like to build UK payments on three pillars: innovation, competition, and of course security. Now, if we look at the sort of first level here is around governance. How do we govern UK payments going forward? The Treasury would like to see simplification. So open banking is going to be under the FCA, and the PSR and Bank of England will work on payment schemes, payment interbank payments like faster payments. Furthermore, to actually implement a lot of the policies that we'll talk about in a second, there's going to be a new Payments Vision Delivery Committee that will be chaired by the Treasury to really drive through some of those more difficult decisions. If we look at the policies themselves, there's 5 key areas: open banking, interbank payments, digital ID, cryptocurrency or CBDC, and finally fraud. Let's start with open banking. Open banking constitutes a big part of the national payments vision. The Treasury explicitly says that open banking should be broadened to more use cases, including e-commerce, and it should be used to drive down cost with increased competition. The FCA are being asked to also make sure that there's a commercial model in place and that the dispute mechanism works. Let's look at the interbank payment space. So previously, the UK had focused on the new payments architecture, or NPA. The national payments vision kind of rose back from this and says, let's make some big changes, some incremental changes to faster payments so that it can work better based on what is fundamentally a very good system. And let's take our time with the Bank of England and the Payment Systems Regulator to decide what the future of UK interbank payments should look like. And one of the key issues here is that there's a lot of moving parts. We have distributed ledger technology, we have a lot of work, as we'll mention, on central bank digital currencies. And so it's not immediately clear exactly what should be built, and therefore it doesn't make sense to kick off a major program when what you deliver in 5 years may not actually be what the market needs. Right, let's move on to digital ID. As part of the Uses and Access to Data Bill, Digital ID will get a framework of which market participants can build their own products. Importantly, there will not be a national ID card scheme, etc. in the UK. But it's thought that this framework will allow market participants to build solutions, and these solutions will ultimately drive down fraud. On the digital pound, or CBDC, there's a commitment for the Bank of England to keep researching into a retail payments digital pound. Now, this would actually require primary legislation, and so it's not something that can just be brought in. It will need to go through parliamentary scrutiny, debate, and legislation. And then finally, I mentioned fraud. Clearly, there's been a lot of changes around how fraud is to be prevented in the UK. And the Treasury is setting out a vision to take stock in 12 months of the authorised push payment fraud measures that have been in place, and then look at other ways in which fraud can be handled throughout the system. So 5 pretty huge areas, from open banking, opening up competition, you have the core infrastructure that's being looked at to actually process payments, through to new innovative ideas of digital ID, CBDC, or the digital pound, and then finally the £8 billion problem that is fraud. So, what's the evaluation? What do we think about the national payments vision? I'm going to start with my views on open banking. Firstly, it's extremely exciting to see the Treasury recognise open banking as being such an important part of the future of UK payments. It's seen as needing to be a ubiquitous payment method, and there's a real focus on the impact that open banking can have. This is brilliant. I would say, though, that it sidesteps some of the more tricky areas. In talking about wanting to lower costs for businesses to accept payments, it also talks about incentivising banks to invest in a commercial model. Now, this is extraordinarily difficult. Banks earn interchange, 20 basis points, from cards, and if the open banking model was to pay that equivalent fee back to banks, then it wouldn't be able to deliver cost synergies or cost improvements for merchants. So we're kind of caught in a bit of a difficult situation here. Personally, I feel that we will have to come down on the side of one or the other. Either banks will be incentivised fully to offer open banking products, and therefore they will be more expensive and we won't see the cost synergies for merchants, or there will be no or some repayment to banks, but the value, the benefit will really be transferred to merchants. And I want to be clear here, I don't think that this is a situation where open banking doesn't provide some kind of payment back to the banks for providing services. I just don't see a world in which it can be a high enough incentive to fund all of the work that needs to be done to build open banking products and compensate from the cannibalisation of payments, and as we look at open finance, of opening up the mortgage book and other areas. So I think there's some difficult decisions that need to be made that have been somewhat sidestepped here. Okay, let's move on. Actually, the payments infrastructure side is a really, really strong positive here. MPA seemed to be a really difficult project to get its head round, and there's obviously been some challenges around pay.uk. Making tweaks and improvements to faster payments just to solve some of the really granular defined problems that we know exist just seems obvious and a great thing to do. I also agree with the approach to wait and see and think a little bit more big picture about what do we need in 20 years' time from a payments infrastructure. In my mind, stable coins or digital currencies, I really need to be part of that payment system. And maybe we're in a world where tokenized real estate exchanges through a national payment system. Might seem a long way off, but 20 years is a long time. So I think this was a great approach, practical but visionary at the same time. Okay, so let's talk about that digital pound. The paper talks mostly around a retail use case for a digital pound, and really talks about kind of financial inclusion where people may want to use cash but they can't because of the need to use digital payments. Personally, I just don't see it in a retail environment. I think the value of cash for most people is that they are used to it, and so they actually don't want to move on to a digital payment method. They are potentially elderly and don't really understand online banking and find it, in some ways worrying. For others, it's the physical aspect of being able to do their sort of internal accounting and see how much money they have. That really won't be replicated by a digital wallet. And finally, a lot of the use of cash is because of the informal economy and where it doesn't necessarily suit the different actors in that place to have this digitalised and traceable. So I do commend the Bank of England for trying to build something that is privacy driven and can kind of really sort of keep cash as such relevant. Personally, I feel that actually a government issued digital pound really has a lot of applications in the B2B and high value sector. And that's where personally, if I was to be investing time, I think that's really, really interesting. You know, how do we replace chaps? How do we have a digital pound that can be used for trade finance around the world? So I differ a little bit versus the national payments vision there. Digital identities. Look, I would love that. I really strongly believe that we need a national ID, but I fully understand that from a political perspective, that is a hot potato no one wants to touch. So I think the approach that they're taking is probably the only rational approach that can be taken. Finally, fraud. It seems a little bit to me that, sometimes the best way to stop a car from crashing is to take the wheels off. It feels that we are approaching fraud by trying to restrict payments and, really slow down payments. And I think that's the wrong direction of travel. Don't get me wrong, fraud is very, very difficult to deal with, and the consequences of fraud are life-changing. But we really need to double down on focusing around where is fraud being originated from, and how are fraudsters getting access to bank accounts. So personally, I see that the onus and the responsibility falls on the bank that offers a bank account to fraudsters. Now, there does come, solving this causes risks around de-risking for banks and people not being able to access bank accounts. But I feel a mix of digital ID and more scrutiny of who is holding a bank account could solve the problem of fraud. And let's take solve as a very high level here. It's not going to eliminate, but solve a lot of the fraud without us having to slow down payments. If you tried to make a high value payment in the UK in the last few months, you will find it can be an extremely frustrating experience. And that just means that payments aren't working. If a car dealership can't accept payments from a customer sitting in a chair looking at the car they want to buy, something isn't working. And so clearly there is a big focus here on fraud, which is definitely the thing we need to do. But I do think that we need to think a bit bigger picture than slowing down payments and sort of holding back consumers. So, in conclusion, the national payments vision is a big step forward. It's a really, really important, almost landmark moment in the future of UK payments. But it has dodged a couple of key decisions that need to be made. And that's where I feel like the National Payments Delivery Committee is going to be really important. Can it make those decisions? Can it decide between competition and incentivising banks? And if it can do that really well, then the future is extremely bright for the UK and UK payments. Thank you for listening to this. My name's Kieran O'Malley.